So there is a need for you to understand correction of errors before you can move to suspense account. Now, when we are talking about correction of error, it all starts from your trial balance. You know that after writing up your trial balance, the debit side and the credit side must be equal to each other. But there are some cases whereby the debit side and the credit side will be equal to each other, but there's an error in what you have written down. Now, all those errors are called what we call error that does not affect the agreement of trial balance. Do you get it now? So those errors that happens, that occurs, but you didn't know because the trial balance still balanced, the debit side and the credit side are still equal to each other. So all those errors that occurs, as I said the other time, are called errors that does not affect the agreement of trial balance. Now you can see we have listed it here. So there is a mistake in the figure. We have 1, 2, 3, 4, 5, 6, and 7. 7 in numbers. Now let's start with the first one, error of omission. Error of omission occurs when the transaction is completed or completely omitted from the book of accounts. So you can have a question like the sales of 15 naira goods to John was omitted from the book of accounts. It is called error of omission. We are still going to solve question on it. Now the second one, which is error of omission. This error occurs whereby a transaction is written in another person's name. So this occurs, or it is usually when the name in which you have written the account is not for that person. Now, for instance, now I sold goods to John, but I recorded it in my book of account in Tunde's account. I recorded it in Tunde's account. This is an error of omission. I sold goods to John, but I recorded it in Tunde's account. It is an error of omission. That is a correct amount which is written in another person's name or another person's account. So for the error of principle, this one is another class of account. So now that error of omission, I said another person's account. But for error of principle, it is another book of account. That is sales of or money for, okay, let me say 16 naira incurred for motor expenses was recorded in motor van account. You know that motor expenses account is different from motor van account. Do you get it now? Instead of me recording it in motor expenses account, I recorded it in motor van account. That is an error of principle. Now let's move to error of original entry. Error of original entry occurs when a wrong amount is entered in the debit and credit side. I said when a wrong amount is entered in the debit and credit side. There are some questions here, so just know that for error of complete reversal of entry, this occurs whereby the account that is owed to be debited was credited, while the account that was supposed to be credited was now debited. So that is error of complete reversal of entry. The account that you are supposed to debit, you credited it. The account that is supposed to credit, you debited it. It is complete reversal of entry. So we have compensating error. When we are talking about compensating error, so you recorded it in the left and right side of the ledger. Therefore, they both cancel out. They cancel out each other. Now, for the last one, which is error of duplication. Error of duplication means you recording the same transaction twice. You get now? You recording it twice. So, sales of goods to John was recorded twice in the book of account. The error that happens here is called error of duplication. Now, the next one is the procedure. Before you can start your correction of error, you need to note all this. The first one is the trial balance rule. I hope you haven't forgotten the trial balance rule because you might have done it before moving to correction of error. And for the core purpose, when we are talking about the trial balance rule, the rule move like this. All assets, we have assets, we have liabilities. You know, we have capital, we have expenses, we have what? Income, we have sales, we have purchases. So the rule says that all assets is what? You debit all assets, you credit liabilities, right? You credit capital. Expenses, you debit expenses. Incomes, you credit incomes. Sales, you credit sales. And purchase, you debit it. So you need to note all this. It is very important because we are still going to this video. Now the next procedure says that identification of type of error. You should be able to identify the types of error which are listed here. Now the next one is identification of the two accounts involved. This is very important. This number 1 and this number 3 is very important. You need to be able to identify the two accounts that is involved. So we have done all these things before, whereby in your cash book or when you are asked to write up the ledger, so you should be able to identify the two accounts involved. The next one is interpretation of errors in the ledger. Now this also is very important. You should be able to interpret it. You should be able to know what happened, which type of error occurs, and when you know it, you now be thinking that, okay, how will you solve the problem? How will you correct these errors? The last one is now the preparation of journal. When you know all these four, the last one is very easy, right? It's just to write it down. So let's start with the question we have on the board. The first question says, okay, before I move to that, let's sketch out or write out our journal. Let's draw out our journal. So our journal is like this. Our journal, we have particular. I'm going to have debit. The last one will be credit. So let's start with the first question. The first question we have on the board says, sales to Ogunde 500 naira was completely omitted from the book of account. That is what? Error of omission. Now, what are the two accounts involved? That's what we are going to think of now. The two accounts involved here, sales to Ogunde 500 naira was completely omitted from the book of account. So if the transaction was completely omitted from the book of account, what are you going to do as an accountant? You are going to think that what are the two accounts involved? Do you get it now? So when you are able to identify the two accounts involved, that's when you'll be able to write up to what? Your journal. So the two accounts involved there is Ogunde, which is the personal account, and sales. That is the two accounts involved. Now, when you now understand or you now identify the two accounts involved, the next step is that which one is going to be debited and which one is going to be credited. Now, from this thing, the balance rule I've written on the board here, it says that sales account is what? Credited. So when you sell goods to Ogunde, what happens to your sales account? You credit your sales account, and Ogunde, who is the receiver, will be what? Debited. Because from the double entry principle, we know that every debit entry, there must be a corresponding credit entry. And we also know that debit the receiver, credit was the giver. So we have Ogunde. Let's write the debit entry first. Ogunde. So Ogunde will be debited, right? We agree on that. So don't forget to put out the naira sign. Now the next one, the second account is what? Sales. Sales will be what? Credited. 500. Now what am I going to do? You know that in journal you need to narrate, right? So the narration is going to be sales to Ogunde was omitted from the book of account. Was corrected. So that's the number one. Now let's move to the next one, B. Goods purchased from Ibrahim 300 naira was entered into Abraham account. So what is the error here? The error of what? Commission. They entered into the wrong person's name. So again, sales of goods. Goods purchased rather from Ibrahim 300 naira was entered in Abraham account. You purchase goods from Ibrahim. Do you get it now? When you purchase goods from Ibrahim, let's do it. Let's draw it out in our agenda. So if this is Abraham, this is Ibrahim account. Goods purchased from Ibrahim. You know that you purchase goods from Ibrahim. Ibrahim is the giver, right? What will happen to Ibrahim account? We're supposed to credit Ibrahim account, right? With 30 naira. But was now entered in Abraham account. That means instead of them to credit Ibrahim account, they now credited what? Abraham account with 30 naira. So what do you think that will happen? We know that it's going to be purchased, right? How do you correct this? They mistakenly credited Abraham account. But now we want to now correct it. To correct it is that we are going to credit what? Ibrahim account. So when we credit Ibrahim account, we need to cancel out this transaction. That is, we need to close this Abraham account. What we are going to do now is that we are going to debit Abraham account, right? When you debit Abraham account, you are going to credit Ibrahim account. So when you debit Abraham account, what happens is that the transaction closes. That is, they have cancelled out the amount, right? The transaction have closed. Now, we now open a new account for Ibrahim. So the correction of error is that we debit Abraham account. So it is simple logic. Abraham account 30 naira. Then Ibrahim account, you debit credit 30 naira. So we just see that error of commission corrected. In short, it's just going to be error of commission. Corrected. Then you close it. So we need to manage the space. Now let's look at the next one. Sales account is undercasted by 380 as also his salaries account. Now what you need to do here is that the two accounts here that is involved here is what? Sales and salary account. So what we are going to do is that they say that they undercast. That is, for instance now, if the amount that they're supposed to write here is 40 naira, they now recorded 20 naira. It means that you have undercasted the amount. Do you get it? You have undercast the amount. Now, how do you correct it? And they say that they undercast the amount by 380. You know that's normal. In a normal case, sales account is what? Credited, and salary account, which is an expenses, right? It is what? Debited. So, to correct this undercast, we need to add the money to the credit of sales and the debit of salaries. That is all. As I said the other time, salaries account is an expenses, right? It is what? Debited. So you need to add the amount to it because it is debiting the amount that is there. So we need to add it. When you add it up, that is, we are now going to get the total amount that is there. Since it was undercasted, do you get it now? So we have 380, then the other one 380 for sales. Error of what? Compensating error. Compensating error corrected. So we need to move fast. D. Commission received 151 naira was entered in sales account. So commission received. You get it now. Commission is an income, right? Income is credited. Sales also is credited. Now let's look at the question again. Commission received 151 naira was entered in sales account. So we need to credit because we receive commission, right? It is we are going to credit it to commission received account. Then they mistakenly recorded it in sales account. Commission received is an income. An income account is what? As I have written it on the board here, income, we credit income. So commission received, we have two accounts there, which is sales and commission received. I'm going to explain again. What we have to do here is like the way we treated this now. This one is an error of principle. If this is the commission received account and this is what the sales account, what happened is that commission received, which is the income, 1,200, was entered the sales account. Instead of them to credit it to commission received account, they credited it to what? Sales account. So what do you now want to do? How do you want to correct this? We need to remove it from sales account, right? And we need to record it in the correct place, which is. So to do that, we are going to debit sales account. When you debit sales account, but the correct place that you're supposed to be is the credit of what? Commission received account. So when you debit sales account, what happens is that both sides cancel out each other. So the account has what? Closed. Now we have corrected it by opening the correct account for it. So you credit what? Commission received, then you debit sales account. So we have commission received and sales account. This is what? Error of principle. That is one class of account. Error of principle. Corrected. Now the next one is discount allowed of 870 was entered in error to the debit of discount received. So we know that discount allowed is an expenses, and expenses is what? Debited. But discount received is an income, and income is what? Credited. So again, I said that discount allowed 870 naira was entered in error on the debit of discount received. So they mistakenly recorded it in the debit of discount received. And if you want to correct it as I was doing it the other time, what will happen is that since they mistakenly recorded it in the debit of discount received, instead of it to be in the debit of discount allowed, what you are going to do there is that you are going to credit discount received so that the one that they have recorded on the debit side and the one that you recorded on the credit side will cancel out each other. Then you are now going to debit it to what? Discount allowed. So we have discount allowed. And discount received. As I said, you debit the discount allowed, which is 870. Then the other one, which is discount received, 870. So I'm going to do the last, I'm going to stop at F. Now, this next one says the purchase of a motor car, 900 naira, was entered in motor expenses account. So this was happening here now. We have to account. This is for motor car, and this is motor what? Expenses. Again, the purchase of motor car, 900 naira, was entered in motor expenses account. And I said the other time that what? This is an error of principle when a transaction is entered in the wrong class of account. A purchase of motor car, 900 naira. So you recorded it in motor expenses account. And don't forget, we said all the expenses are debited. That is, you debit the amount here under motor expenses account. But it should be in what? Motor car account. So what is going to be the correction? The correction here is going to be that you are going to credit motor expenses account and what? Debit motor car account. Do you get it now? So these accounts here have closed. This is the correction. Do you get it now? So for our F, this is DEF. For F, we have what? Motor car and motor expenses. Motor car will be what? Debited. Motor expenses will be credited. So the narration there is that error of principle is now corrected. So the last transaction written on the board, try it and comment. Put it down in the comment section. So thank you for watching. Please don't forget to like, share and subscribe.